Thanks for joining us. We're here. Okay, good.
You could have used it.
I'm trying to get to the people in the back, but thanks.
You're doing great.
I haven't lost my voice yet, so I'm still hanging in.
All right.
Look, this is a topic that's near and dear to my heart. I came out of the oil and gas industry, and so I've always viewed Bitcoin mining through an energy lens. It's an energy-first business, and now we're kind of taking that into AI and the broader idea of flexible compute. So I'm really excited for y'all to comment on that. Let's start at that higher level. You're both entrepreneurs. These are kind of recently started ventures that you're ramping up. So give me kind of your high-level introduction to what is flexible computing, why it's important to you, why you're focused on it in your own endeavors, and why it's kind of that key value proposition in terms of what you're building.
I think you should definitely start with this one.
Let me do that. You guys hear me, right? Awesome. So we are going through a huge transformation, a huge transition for compute. 5 years ago, there was only one type of compute. 24/7 uptime, let's keep computing no matter what. Bitcoin miners introduced a whole new concept, curtailable compute. We can just shut down our servers and be a good citizen to the grid. That mindset that was developed by Bitcoin miners is now becoming a lot more popular across broader data center industry and across industries that, like in general. So flexible compute, if you want to define it, I would say we can classify compute into 3 different categories. We can, like Bitcoin mining, all of us probably understand what is Bitcoin mining. We call it curtailable compute. So anyone can shut down at any time and nobody cares. Bitcoin network doesn't care, I don't care, Adam don't care, nobody cares if you shut down your servers. The second type of compute is the type of compute that people cares about, but there is no deadline. We call them deferrable compute. So you can just schedule them for a later time to be done tonight, tomorrow, next week. And the third type, we call it time sensitive. So it should be done from now within the next few seconds or minutes. So there's a time sensitivity that requires it to be done immediately. So we can define flexibility across these 3 categories of compute. And by using this framework, we can define a whole lot of energy strategies for data centers to operate based on real-time grid conditions or grid conditions in general.
Yeah, I think Medi's always has a great definition on it. So at Plural, what we do is we work with supporting the financing of both energy production and energy consumption, and I guess also energy storage. And so from that perspective, we've worked with a number of different providers of both electrons and compute. And we really think of flexible compute at almost at a more macro level, where it's about how can compute impact the revenue mix of these different energy providers, and then also like how could it fill in the gaps. And so what we're seeing amongst both sets of clients, whether they're data center operators or energy companies, is essentially what the marketability of an electron is changing. So it used to be that electrons could only be sold as far as you could stretch a wire. But with compute, that completely changes where electrons can be sold. It's all, like a data center is almost to an electron what a refinery is to oil. And so what that means is that as these power producers are beginning to integrate compute into their offtake agreements and their revenue mixes, they're all of a sudden accessing much more global markets. Bitcoin is available everywhere. AI compute can be consumed really anywhere. And the result of that is that you essentially have them completely rethinking how they go to market, how they structure their finances, and how they build projects. And so what we're seeing more and more when we are working with renewable energy companies or other energy providers is how can compute fit into that capital stack, into that revenue mix, which is almost like a different type of flexibility, but it is based on those core features that Medi mentioned about it being interruptible or scalable.
I think it's a really good point, Adam, that this advent of flexible compute has kind of taken power from a more hyper-local market, just serving a local population, to all of a sudden this more international commodity. That's bringing massive investment. We see headlines every day, some bigger gigawatt scale kind of AI data center build out. I'm wondering if each of you can comment a little bit around the risks that probably aren't fully disclosed in those headlines, or as people transition into actually building out, energizing, and executing on a project, the risks to their business that maybe they haven't fully contemplated, and how your technologies are maybe helping them deal with that or think about that.
Yeah, so I think, so there's getting these things going, whether it's flexible compute or the electrons or the molecules that power that compute, the ASICs that process it, whatever it is there's a lot of moving pieces. And so I think I don't buy that AI is a bubble, but I do think that there's probably some money that's flowing into things that aren't really properly underwritten. And because there's a lot, we're working on a deal right now actually with, we're advising a state government on how to distribute flexible compute across their entire grid. And there's a lot of moving pieces that they have to consider in terms of how the lead times on generators, the tax structures of the projects themselves, if they are going, how the deals are going to be structured, whether it's going to be multiple IPP and data center subsidiaries or combined into a vertically integrated. There's a lot of moving pieces that go in these deals that's really hard to understand. And so the way we think about it, and we use tokenization as our core, as the core feature, is essentially the average investor that wants to participate in these isn't going to want to underwrite infrastructure deal, but they are going to want to invest in the theme, and they're probably not going to get the best returns investing in the theme by going and buying whatever random ETF is in vogue related to AI. And so we're really interested in how we can build these products that are more accessible and more understandable for retail investors than a, deep dive Reg D data room, but actually a little bit more yieldy and safer than a random ETF that they aped into on Robinhood.
Yeah. Medi, do you have any comments on kind of risks and complexity sort of beneath the surface of the headlines?
Yeah, I think the biggest bottleneck for growth of AI and data centers right now, everyone think it is power, and I think they're right. However, I think they're going in the wrong direction. So you see the news in every headline, they're announcing a new gigawatt scale data center being built here, there, and everywhere. But that's kind of misleading. These guys want that amount of power to be secured, but they don't consume that much power. The utilization rate for high-performance compute data centers and AI data centers is usually much, much less. 40-50% utilization is the normal rate for them. So when we are looking at the grid conditions and the availability of infrastructure, the first thing that comes to mind is flexible compute could actually unlock a lot of capacity across the grid. And as Adam said, it is like a digital form of load that could be distributed across the grid in the right location of the grid. So what we are doing at my company, Load, we have built a platform that does distribution of compute workloads across different locations based on grid conditions. So we can, let's say it is morning 9 a.m. Pacific time, the sun is shining in California, the price of energy is negative, but it is noon in New York. The grid is full of coal-powered electrons, and it's very expensive. So you have the option to send your ChatGPT prompt to be done in California with negative energy, rather than doing it in New York, which is expensive and very carbon intensive. So that's what we do. We distribute compute workloads based on real-time grid conditions across multiple different locations, and we think that could unlock a lot of capacity based on the flexibility of compute.
So I think you have something you want to say.
Yeah, no, I think that's such an interesting point. I just actually had a little anecdote. We were recently working with a data center operator for a hyperscaler, and I mean, this is probably not news to anyone who's listening to this, but the focus is on, can I get guaranteed power and compute capacity over capacity by 2027? Because if you think about it, the hyperscalers are playing a much different game than infrastructure investors or infrastructure builders. They're trying to win market position and theoretically become like an enduring dominant company. So they have unlimited capital available to them right now. I feel like every week there's another, like their enterprise value goes up like by 100 billion by the month, it feels like. And so they are in this game where it's like, I would rather buy 3x the compute to guarantee that I have market position by 2027. I think post 2027, we're going to see a completely different game where it's less about positioning and it's more about optimization being played amongst them. And so the stuff that Medi's talking about is just like, I think that this idea of distributed networks of compute and how the network is providing compute, not just the cluster. Like, it's actually crazy how often we're talking about clusters and centralizing all this energy to one market node point, one point of failure, everything. But that's just because the game they're playing is get big fast now so that I'm the one left in 2028.
No, really well said. I'm going to lead into another question by doing something dangerous as a moderator, which is expressing my own opinion. And that is around the historical practice, particularly in the hyperscalers, of adhering to the 5 nines of uptime. 99.999%. You have to have that uptime to be able to operate a high-performance computing business. I run into this wall myself in discussing this issue with a number of people that sort of take that as just this gospel immovable truth that cannot be talked about. It is my opinion that to get anywhere close to all of the gigawatts that we see people announcing on a daily basis, we have to abandon the 5 nines uptime because it's completely unnecessary for most workloads, and it requires a shift in thinking that often doesn't come from big, comfortable, ultra-profitable incumbents. So I see a big opportunity for disruptors like you and other companies to bring new technology, new ways of thinking, to say, if we're actually going to get to where we want to get with all of these gigawatts, we have to think outside of this exorbitant kind of required uptime way of thinking. So from that viewpoint, I'm wondering to what degree you agree or disagree with my outlook, but also how have you experienced this discussion with people as you try to bring them over to understanding that flexible compute isn't just kind of an attractive idea that's somewhere out on the horizon, but rather a critical part of like near-term execution of key business outcomes. I'm hoping we're reaching an inflection point here with all the capital coming in. Curious what your experience is on the front lines around that.
Sure. So I've been going to many data center conferences in the past 2 years. My observation is like 2 years ago, none of them cared about flexibility. Everyone was in like 100% build mode. More land, more power, more capacity. Is there demand out there? We don't know, but it might be. But let's build. Let's do the land grab, and then we'll figure out the demand later on. I see that very similar to Bitcoin mining back in 2019 or 2020, when everyone was building hundreds of megawatts worth of like Bitcoin mining capacity, and everyone were looking for PPAs, 100% uptime, and all those things. ASIC prices, S19's $10,000. Power prices, no one cared. $100, $150, we don't care. Just give us the power, because the profit margin is just too big that we're not sensitive. Same thing is going on for AI and high performance compute today. But I think in 2 or 3 years, when there will be a lot of hardware sitting out there with not enough demand, all of a sudden power becomes a lot more important. People won't process their workloads unless it actually makes sense. Or they will shift their workload to a different location, but they will get access to a better power rates, and in general, decrease their cost of compute for the overall business process.
Yeah, I think I agree with that, and that's why I love what you guys do so much. And I think to your question about 99.9 uptime, 999, the however many nines, the 5 nines,
Too many nines.
yeah, 9 nines. I don't disagree with you, and maybe I reject the premise in some ways, because I think we're working on this essay internally that is called temporal arbitrage, which smarter people than me, I think, have referred to as like the atom bit spread or something like that. And essentially the idea is that the time that bits, as in like Bitcoin or compute and vibes, move markets is way faster than the time it takes to put atoms in the ground and like actually go build things like compute and infrastructure. And so that creates this natural market inefficiency that's always going to be it's going to be impossible to overcome. So like, for example, if you could stand up a Bitcoin mine as fast as you could react to the price of Bitcoin, then there'd be like really no spread between hash price and Bitcoin price. And so essentially what I think that's a factor here. That what we're seeing is an overbuying of compute resources, and that you then are insisting on guaranteeing 99.99999% uptime because we're all rat-brained, and if ChatGPT is slow, then we're going to go to Anthropic, and then if that's slow, we're going to go to Gemini. And so again, it's like there's that temporal arbitrage is happening at that level too, where it's like the consumer is switching faster than you can go build more compute and more mines. And so what I think is going to happen is that right now, as you're acquiring compute from the same cluster, the same power base, that what will likely happen is that as technology like Medi's evolves, it'll be actually there'll be a better market price for compute, where you're not your supply base is a little bit more wholesale and less vertically integrated, and then you could theoretically get 99.999 uptime from the whole market, not just your set of suppliers that you have 20-year PPAs and offtake agreements with.
I think that was some really interesting kind of color on that issue. And I do agree with we're in this massive build out phase, and then some rationalization is going to have to take place down the road. Both of you, I assume, travel a lot. You see a lot of different, deals and jurisdictions. I wanted to take this opportunity to see if you could use that experience and maybe inform the listeners here a little bit around what have you seen in different jurisdictions that is working maybe in terms of valuing flexibility and load and rewarding that in a way that incentivizes more, that is good for all end users, that strengthens the grid overall. Maybe something you've seen that doesn't work, or different strategies in different types of markets that you think may be kind of best practices that maybe could be expanded from what you've seen. Because local jurisdictions and regulations can change the way that flexible compute does or doesn't make sense in pretty significant ways. So comment on that if you can.
I think deregulated markets such as ERCOT, PJM, New York, ISO, they have historically been more friendly to flexibility. However, flexibility is a hot topic across the energy industry right now. Duke Energy's of the world, Georgia Power's of the world, like these regulated grids are taking that into account, and they're working on it. Like TVA's of the world, they're like introducing many grid flexibility programs. So generally, regulated markets, and specifically PJM and ERCOT, seem to be the better platforms to build flexible compute. That doesn't mean everywhere else are like falling behind. So they're adopting strategies to become flexible. They are a bit slower because they are more regulated. However, they are catching up. So I guess it's going to happen across the board, everywhere, no matter where you're operating across North America. You'll have to maintain some level of flexibility for your compute.
Yeah, I agree. Deregulated markets, most of the activity we see in the space is ERCOT and PJM, and I think there's a lot of interesting opportunity. A developer that's willing to think through power production, compute production, and storage together, like I think that's a really interesting business for someone else. But I'll just comment on regulated markets. In this case that I mentioned, where we're helping a state, it's a fully regulated state, and the state is interested in. They don't really think of it in terms of like, they don't have a price signal because it's fully regulated, vertically integrated by the utility. It's just a toll. And so what they're thinking about is excess capacity. Like where are there parts in the states where there's electrons going over the dam or in the natural gas generators under capacity? And what we're actually looking at, and this isn't public and it's not official yet, but one of the things that I'm just pushing is this idea of rather than having a state strategic Bitcoin reserve, what does it look like to have a state strategic Bitcoin power reserve? Where if the state is going to put $100 million into Bitcoin, why not put them into Bitcoin mines strategically deployed around the state to sweep up that excess capacity?
I love this.
And then keep the Bitcoin on their balance sheet and grow from there. And so one of the things that we're looking at is essentially moving forward with this concept and then opening it up so that citizens of the state can essentially co-invest in Bitcoin mines with the state government. And basically, that way the state is incentivized and everyone in the state is incentivized. It's kind of socialist, to be honest, but the way that everyone in the state is incentivized.
Let's not brand it that way.
I know. And the way that way everyone in the state is incentivized, like, well, let's just go produce more power because we might, if we produce power that is 10x our population, now that we can export electrons to anywhere in the globe and that we can all own a share of the Bitcoin or the compute that's mined from it, then like we're actually all playing the same game. You reduce NIMBYism, you begin to, and then you're actually creating this like statewide price signal that you can then go to market with that makes you provide system-wide flexible compute, not node-focused flexible compute.
Count me in as a supporter and champion of this
Thank
idea.
you.
Y'all heard it first here. The Bitcoin Power Strategic Reserve.
Off the record, yeah.
It even sounds cool. Guys, as we kind of come to a close, I want to give each of you last chance. If there's a question I didn't ask, something important you'd like to share with our listeners here, or just something interesting your company is working on, give us kind of some parting comments. I think you're doing really important work, and I expect that flexible compute will continue to play a more and more prominent role at this event, but I hope at more events also. Give us some closing thoughts, guys.
Sure. Something I wanted to note as a closing is our company introduced a new product. We call it Cloud by Load. It's a flexible AI inference platform where you could actually deploy AI models in a grid-friendly manner. So we are in the background routing compute workloads across different resources based on grid conditions. But in the forefront, where you're using the AI model, it's just like 100% seamless. You get access to like 5 to 10 different AI models and can just deploy them in an energy-smart manner. So please go ahead, register on clod.io and give it a try and give us feedback. Thank you.
Very cool.
Yeah, no, I'll just say I love this topic. It's definitely not why I started Plural. We started Plural as a tokenization platform focused on this idea that the electron economy, the way that electrons are produced, consumed, stored, is going to be one of the most generational investment opportunities, and that we need to make it possible for as many people to participate in it, and for as many developers, not just the Wall Street-backed developers and the hyperscalers. We want the middle market to be able to participate in it too, and it's been really incredible to be, in rooms like this, learning about all the different parts of the industry that can kind of come together, and it's great. I mean, that we have Bitcoin mines that can be used as flexible compute, tokenization that can essentially create programmable infrastructure and programmable capital for these assets, and now compute being tokenized too. I think it's a really, really awesome time to be in this space and to be putting dollars and, more importantly, thought and time into it. So thank you guys for having me.
Thank you, Medi and Adam. Keep up the good work. We'll take a couple minute break, and then we're going to have an awesome presentation from Texas A&M. Thank you, guys.